Canada lost another 18,000 jobs in insolvency filings, so just hit the highest level since 2009. The Canadian Real Estate Association downgraded their 2026 forecast. And while all this is happening around Canada, one city in New Brunswick has reasserted itself as a seller's market. And if that all doesn't make sense to you, you are not alone. But at the end of this video, it will. How's it going, everybody? Welcome back to the channel. If this is your first time here, my name is Brandon Vincent with eXp Realty. I've been actively selling real estate in St. John for over 7 years now, with over 130 deals done during that time. My goal on this channel is to bring you relevant real estate information in an entertaining way. So let me know if you're enjoying these market updates down below, because right now we're in a shifting market, so I'm having a lot of fun with these, but I want to hear from you. So without further ado, we have Canada going one way, while New Brunswick real estate market is going another. Let's dive in. Also, make sure you keep in mind that the May market update is for all of the April stats, because the real estate stats are always 1 month behind. So last month, I told you that Canada had gained 14,000 jobs in the month of March, and that was the first month of growth all year. So over the first quarter, we had 1 month of growth. And now April has put us back into losing jobs again. So Canada shed 18,000 jobs in the month of April. Unemployment climbed to 6.9%, a 6-month high. And year to date, Canada has lost 112,000 jobs, and 111,000 of those were full-time positions. So Dan Kelly, president and CEO of the Canadian Federation of Independent Business, has said that we've now had several quarters where business exits exceed new business creation, which almost never happens. This has a big impact on the employment levels across the country. So the fact that we're now seeing more small businesses closing than we're actually seeing starting up is an extremely bad sign for the country. This is not what we want to see. We don't want to see job losses. We want to see a growing and thriving economy, not one that's reclining and restricting on what is going on. Now, I like what Dan Kelly's saying here, as he's saying that small businesses have been squeezed from multiple directions for years. First with the pandemic, now with inflation, and then the trade war as well. I love this quote because it's so true. Many small firms have not had a normal month of sales in over 6 years. The massive level of economic uncertainty from trade fight and energy pricing has caused small businesses to be reluctant to hire unless absolutely needed. Brandon Bernard, Canada's Indeed senior economist, offered a blunt assessment. Difficult conditions facing job seekers, whether it's youth looking to break into the market or unemployed trying to get back to work, linger. There's little sign of shifting into high gear anytime soon. This just isn't acceptable. Think of the Canadian millennials. So those aged 25 to 39 have faced compounding headwinds, a housing market that priced out ownership for many, wage growth that lagged asset prices for a decade, and now a labor market that is shedding full-time jobs that form the foundation of financial independence. And I'm going to close it off with this quote because I think this is the most important one. Kelly said the solution requires more than just resolving the trade dispute. Canada needs a refreshed focus on small businesses. He said Ottawa needs to focus on entrepreneurship, not just giant projects and big business. And he's absolutely right, because that is the heart of a growing economy. It's the mom and pop shops that employ a whole bunch of people. Sure, these big corporations do as well, but it's these mom and pop shops that really fill in the gaps when the economy is struggling. And if we in Canada can't make it incentivizing for businesses to come here, open here, and grow here, that's very, very bad for the economy. There's been a lot of studies done on countries who have really turned their economic situation around. And from what I've read, a lot of that has to do with them focusing on making it a spot where businesses can thrive, where people can open businesses and grow them there and have them do well. And that's going to be like the heartbeat of an economy. Canada, we can do better. We must do better. Now let's pivot to manufacturing real quick for a second. because a lot of the talk as to why Canada's losing so many jobs has to do with the fact of tariffs and also on the trade war and also on a few other things. But what's not being talked about behind the scenes is actually some things like artificial intelligence, because I don't think companies are actually going to say whether or not they're firing folks because they're replacing them with artificial intelligence. In fact, I think they're going to make sure that they don't say that, because most companies don't want to be seen as firing people and replacing them with robots right now, because that's not going to have a good PR look for the majority of these big companies. So something to keep in the back of your mind is that how much of the current job losses across Canada are actually happening because of artificial intelligence and not being reported that way. So manufacturing jobs are down 51,800 jobs over the past 12 months. The bulk of that hit Ontario with their tariffs on steel, aluminum, and autos. The Ontario unemployment hit 7.5%. So this is a sectorial recession that's not hitting everywhere equally. So that's enough of those depressing stats about job losses. Now, let's look at the rising Canadian insolvencies. Now, this is a topic that not many people are talking about, but it should be the front page of every single newspaper. So the Canadian insolvency filings in Q1 of 2026 was 37,121. That's up 8.5% year over year. And to give that even more context, that's the highest quarterly volume of insolvencies since 2009. And to put that into even more context, 2009 was the global financial crisis. We are now filing insolvencies at rates we haven't seen since the worst recession in our lifetimes. So to break it down, 80% are consumer proposals and not full-on bankruptcies. British Columbia insolvencies is up 16.2%. Prince Edward Island is up 15.3%. Ontario is up 14.7%. A big reason for all of this is the fact that expenses are rising significantly faster than people's incomes. Fuel, food, mortgage renewals. And here's why this matters in the real estate world, is because every insolvency is a potential forced seller. They're a credit impaired future buyer and a household pulling out of the housing market for the next 6 to 7 years. So we're looking at hundreds of thousands of Canadians who are out of the conventional mortgage markets for the back half of this decade. Now, New Brunswick is not in the top of the leaderboards when it comes to insolvencies. We have lower debt loads. Our home prices never reached the bubble levels like they did in BC and some places in Ontario. I've been saying it for so long on so many market updates, but I do believe that New Brunswick is going to be able to hold its value because we are already one of the lowest cost of entry when it comes to buying a home per province in Canada. New Brunswick has some of the lowest average house price per any province. So when you're already one of the cheapest markets to get into, it makes it so enticing for other people to want to come here. That's why we've seen so many people move from Ontario to New Brunswick over the last 5 years. It's because of our home prices, now also mixed with our incredible lifestyle here. Job losses, insolvencies, it's not looking good, Canada. So what did the Canadian Real Estate Association do? They downgraded their prediction for 2026. So now let's talk some stats on the national housing. CREA originally predicted that prices were going to rise nationally about 2.8%. However, now they're saying that's going to be closer to 1.5%. They originally said sales were going to be up 5.1% nationwide, but now they're only predicting sales will be up 1%. And the national benchmark price is adjusted to $664,400, which is down 4.7% year over year. But here's what nobody emphasizes enough when it comes to the national averages is that blends multiple different markets, completely different markets, all into one. Because Ontario and BC, they've had some hard corrections over the last couple of years. Some Toronto neighborhoods are down 15% since their peak. The Vancouver pre-sale condos are down 25% since their peak, while Saskatchewan, Quebec, and Newfoundland have seen modest gains, and New Brunswick has been holding its value. So when you hear stories about the Canadian housing market being down, I want you to know that that doesn't apply to us here in New Brunswick. And your job is to watch these market updates so that you know better. Now let's look at the Bank of Canada, as they've held their overnight rate at 2.25%, and that is their third rate hold in a row. RBC believes that they are done with rate cuts. And the next decision is June 10th, so make sure you stay tuned, but I'm calling it now. They're going to hold the rate. Because right now, they're in between a rock and a hard place. If you cut the rates while oil is high, then you have fuel inflation. And if you raise the rates, then you absolutely crush the tariff-exposed provinces. Their most likely path is just to sit on their hands and hold until the dust settles or the labor market breaks. So the bottom line for buyers is that the rate relief that we were all expecting at the start of the year, that's probably not coming. So remember, the overnight rate at the Bank of Canada affects the variables heavier, and the fixed rates are separate. All right, ladies and gentlemen, this is where things turn around. Let's take a look at New Brunswick. So Canada's unemployment rate is 6.9%, while New Brunswick's provincial unemployment rate is a little bit higher at 7.1%. But remember how I said a city at the very first of this video has shifted into a seller's market? Well, guess what? That's St. John. And St. John's unemployment is at 5.4%, which is lower than the provincial average and also lower than the national unemployment. So while Canada lost 18,000 jobs in April, St. John added 1,300 jobs. Sure, they're only part-time, but while the rest of the country is losing jobs, us here in St. John, we're still growing. So the market conditions, they trend towards balanced in New Brunswick, while the home sales continue to climb. The number of homes sold in New Brunswick through the month of April was 789, and that was down actually 13% from April 2025. On a year-to-date basis, home sales totaled 2,411 over the first 4 months of the year, which was a decrease of 6% from the same period in 2025. So the market continued to find its footing in April, with sales rising for a third consecutive month, despite remaining below last year's pace. At the same time, a stronger flow of new listings has pushed inventory meaningfully higher, giving buyers more choice, said Justin Morehouse, chair of the New Brunswick Realtors du Nouveau-Brunswick. This is creating a more balanced environment where neither buyers nor sellers can rely on last year's playbook. Well, that's very true. So something worth noting is over the last 5 years, for the month of April, New Brunswick has been in a seller's market. And this is the first year in the last 5 that we're actually just into the balanced market for the entire province. The average home price in New Brunswick has hit $363,000, which is above the previous all-time high we had here for the average home price in the province. Good work, New Brunswick. Now, before we wrap things up, we're going to be looking at the main arteries for the New Brunswick market and seeing what is going on in each major area, starting off with Fredericton, who has had 238 sales for the month of April. They've had 391 new listings. Their dollar volume is $93,913,843, with an average home price in Fredericton of $394,596. And the Greater Moncton area has seen 273 sales. They've had 560 new listings. The dollar volume there was $102,413,265, with their average home price at $375,140. The northern region, which has their own thing going on, they had 113 sales. They've seen 253 new listings. $26,837,299 for their dollar volume, and their average home price in the Northern and Valley region of New Brunswick is $237,498. Now, ladies and gentlemen, to my hometown of St. John, New Brunswick. We've had 165 sales. We've seen 320 new listings come on the market with a dollar volume of $63,769,550, with our average home price hitting a staggering $386,482. So right now, St. John is showing one of the strongest labor markets in the entire province. Well, homes are still selling over asking price, which is not the narrative around the entire country. So here's my advice for the buyers and sellers out there. If you're a buyer, make sure that you get pre-approved and locked in at the current rate, because it's not looking good for the rates moving forward this year. They don't look like they're going to be coming down. If you are looking at getting in the market, lock in a pre-approval at the current rates right now and start looking and seeing what's coming in on the market. And for the sellers out there, the spring market is finally in bloom. We're seeing more competition. We're seeing more activity out there right now. We're seeing things selling kind of like they did last year, where there's so many offers coming in at once. So it's very important to have your strategy rock solid when you're listing your property. Make sure that you are doing amazing photos. You're doing videos. You're doing all kinds of marketing. You're doing open houses. You're doing everything, because right now the positioning, the timing, and the execution of your listing is extremely, extremely important to capitalize on this spring market here in St. John. If you're still watching up to this point, I want to say thank you very, very much. I appreciate it deeply. I know that this is very information heavy, and I try to make sure that I'm giving you guys as much info with the right energy to make this exciting as possible, okay? There's a lot happening in the country, in the province, and in different cities, so there's so much going on. It's very important to stay on top of it. I love doing this stuff. I love informing you. Do me a favor, if you haven't yet, hit the like button, drop me a comment, say I watched the very end, and thank you very much for all that, and I'll be like, yes, thank you for watching to the very end. See you on the next video. Actually, wait, before you go, if you want to check out a video of the data center, I'm going to put that at the very end, and as well, the St. John market update for April.